today. Bola Hana, who is the head of investment research at Codros Capital, is live here in the studios. Good morning.
Good morning, boss.
It's good to have you again. When inflation, some forecasts were that we're going to be doing a bit of a gentle soft landing, as it were, and that was what happened.
Yeah, exactly.
Do you think this latest inflation data would mean anything for the fixed income space?
Well, I don't think so. So yesterday, if you look at the market, it was pretty much neutral for a lot of investors. Backtrack beginning of the year, a lot of people had anticipated that by June, July, you would have seen inflation drop significantly to about 13%. But that's defied most analysts' expectation. Yes, it's been on a downtrend, but the rate of decline has been small, like you said, it's been marginal. So yesterday, there was not really anything happening in the bond space. But what we expect to see going forward, I still think the story has changed. So pretty much we're coming from last year, which was stagflation, high inflation, high unemployment, and declining GDP. So the story is changing. The story looks more pretty than it was last year. We have a declining inflation rate now. GDP is slowing down. Last one we saw was 0.52%. So most analysis is that by end of the year, we might see GDP growth of about 1%. So Nigerian story is changing. But I think for inflation, the beauty is also that core inflation is also slowing down. So yesterday we saw it slow down for the 7 consecutive months. So the previous month was 13%, but for the month of June it was 12.5%. And core inflation usually strips off volatile items like food and energy, they're usually prone to market distortions or shocks. So pretty much I think the environment is changing. And if we are going to look at MPC meeting, I think that's probably going to just give them a reason to want to maintain status quo for the next MPC meeting.
Maintain status quo rather than go for a haircut?
Yeah, so I think
what would you advise? How would you vote?
So for now, vote status quo, so I think it might be premature. So you mentioned the I&E window, and that has pretty much affected the equity market. So you've seen the equity market gain significantly from April to date. We've seen stability in the dollar. So for them, I think it might be premature to reverse that. But I'm thinking maybe the next meeting, not this one, they might consider a rate cut.
If the market yesterday decided to ignore the latest inflation because it was lower but not as significant as where the market thought, maybe by June we should be doing, you talk about 13, a little bit around that figure. So if the market is ignoring inflation, what is next? Interest rate?
Yeah, so interest rates, yeah. So for me, I think it's even expensive for the government borrowing at this rate, but of course they need to protect the dollar. So yesterday you mentioned that there was OMO auction as well. So there were 2 OMO bills. There was the 185-day bill. They wanted to raise 5 billion, which they did. There was a 346-day bill as well. They wanted to raise 50 billion, but unfortunately it was just about 14.5 billion that was issued. So yes, they are borrowing aggressively. They are mopping up liquidity in the system. On an everyday basis, you are just seeing aggressive OMO issuances, as if they just want to mop up any liquidity that can come into the system. So I think we're still going to see that going forward, OMO bills. But I think investors want to play in this shorter yield curve rather than do bonds.
Where should I put my assets if I'm trying to balance inflation, interest rate, and a bit of a stable macroeconomic environment in the second half?
Yeah, to be safe, I think you can do treasury bills. So it's giving you a real return. For bonds, bond is roving around what inflation is doing. So in terms of real return, it's more or less zero. But for a lot of the treasury instruments, you can get about 200 bips or 300 bips above what inflation is doing. So that gives you a positive return. And that's what investors are looking for.
Should I be a little bit more sensitive to equities?
Yes, yes. Equity is always a long-term play. So yes, you can have equity in your portfolio, but have a long-term horizon, 2 years, 3 years. But I still think equity is a good story.
Do you think between now and the next MPC, which is just about a few days down the line?
Yeah, next week.
Yeah, next week.
Monday and Tuesday.
It's going to be very interesting.
Yes.
Because the MPC will be coming out when we expect more earnings from the listed companies.
Yeah.
Do you think this could be a source of trading sentiment for investors who may think, look, I'm not sure these fixed income guys are going to give me much more than, let me just check through these earnings. If they're good enough, I might just rebalance a little bit to the equity side of the street.
Yeah, so there are a lot of people that are even very positive about equity. They're just waiting for the earnings release. You mentioned Unilever came out with an impressive result, and of course we saw it in the market performance yesterday. So for the banks, they can repeat the same feat we saw in Q1 results. I think that's also going to affect performance we're going to see in the banking sector.
Okay, let me put we got about 2 minutes left. Let me put some words in your mouth. The announcement this morning from Skybank saying there's going to for a recapitalization. And folks are already on Twitter reacting to that news as soon as it's hitting everybody this morning. That means that this bank needs more money and it's coming out of say, look, we've approached the authorities, the Central Bank of Nigeria. We have various options to recapitalize. Is that a basis for me to take a second look at my banking portfolio, or should I be a little bit selective whether I'm doing tier 1 or I should do tier 2?
Well, I think you should be selective. So for me, I look at how resilient a bank is, the robustness of the balance sheet and all that. So I like to play with tier 2 because over time, in terms of NPLs, they don't really have so much exposure. In terms of loan growth, they've been able to grow their loan books. So I'm safer with tier 1 banks. But of course, Skybank is one of the systematically important banks that CBN has classified. So I don't think anything can happen to Skybank.
Okay, that's a very safe way of putting it. Very nicely, as an analyst. Thank you very much for coming. We appreciate your time. I think maybe we'll get together again before the MPC to also chew this over. You're voting do nothing at the next meeting.
Yeah, I'm voting status quo.
Status quo. Status quo. I'm going to think I'm going to vote, but I don't know whether my vote will count. But, of course, somehow. Both of us are not on the MPC committee members, so we're going to vote outside.
Yeah.
It's good to have you here.
Thanks,
Bola, I know who is the head of investment research at Codros Capital. Let's get back to the top story. Tier 2 listed lender Skybank has announced that a program in an 8-paragraph statement today saying that the lender has appointed a very reputable investment bank as financial advisors for its proposed recapitalization program. Went further to say that the advisors have identified the various options open to the bank for recapitalization, and proposals are being considered by the Central Bank of Nigeria accordingly. Meantime, the lender says his 2016 financial statement has been submitted to the regulator for approval. And it added that given the financial position of the bank, it has fully divested 4 local subsidiaries, realizing total cash of 6.2 billion and in the process of selling off other subsidiaries. We're back in 2. This is Business Morning.